Alright, this is Ubaid on behalf of Electronics, and in this video we're going to be talking about open market operations and the impact of open market operations on the economy. Now, the open market operations have to do with things like changing the required reserve ratio for the banks. Okay, so the central bank, for example, may go ahead and change the total required reserves for commercial banks within that nation. Okay, so this is open market operations. Open market operations. Okay, this has to do with required reserves. And the reason why it makes an impact on the economy is when the central banks, they change the required reserves for commercial banks to maintain, and they regulate these commercial banks. What's going to end up happening is banks will lend out less and keep money for its reserves. Okay, it will keep more money in its vaults, okay, in the bank vault. Okay, and it will lend less money when it comes to mortgages, loans, personal loans, line of credit, so on and so forth. Okay, as a tool, okay, basically what happens is, okay, as they reduce, okay, the lending of money, they are constricting the economy. Okay, they're slowing down the economy where consumer spending goes down because consumers are not able to borrow in the first place. Okay, when it comes to mortgages, loans, line of credit, so on and so forth. Okay, so this is a tool to restrict the economy. Required reserve, a tool to restrict or expand the economy. If you reduce the required reserves for a commercial bank to maintain, okay, the commercial banks are going to go ahead and give out the rest of the money they have, okay, in terms of mortgages and loans and line of credit. As a result of which there's more money being circulated within the economy, consumer spending will go up, business expenditures go up, net exports may go up, as a result of which GDP may go up. Okay, so this is restrict or expand the economy. Okay, this is required reserves. All right, so that would be it for required reserves. Okay, we can now move on to another part of open market operations, which has to do with money circulation by purchase of treasury bonds and securities. Okay, so this is treasury bonds and securities. Okay, so this is money circulation. So basically what is happening over here is, as the monetary policies get imposed, the central banks will buy treasury bonds and securities from commercial banks, as a result of which the commercial banks will be able to receive money from central banks to bump their reserves up. Okay, so this has to do with monetary policy as well. Now, if they buy fewer treasury bonds, and let's say they leave the commercial banks on their own, okay, it's possible the commercial banks may go ahead and lend more money, as a result of which they may risk of being bankrupt. Okay, they may risk a bank run, and they may risk bankruptcy. Okay, so this has to do with treasury bonds and its impact on the economy. Okay, securities and its impact, purchase of securities and its impact on the economy. All right, so that will be it when it comes to open market operations for this video. On behalf of Electronics, this is Ubaid. Have yourself a great day.